All right, we're good.
All right. Welcome. Happy May, everybody. Greg Hanner. I am president-elect for 2025, here pinch hitting for Michelle. And we've got a great topic today we're going to jump right into. Just want to share with you leadership team. We've got members on the call. If you could just Courtney, I think we've got actually president-elect, sorry, immediate past president, Marie. Can you just say hello?
Of course. Hi, everyone. How you doing? Nice to see you. If you're live and you want to jump on so I can visually see you, that'd be great. But right now I only see a few of us, but you might be watching this later too. So.
And then we've got Christina Silva.
Hi, everyone.
And we've got Courtney Hoy.
Hi, guys. How are you?
And Courtney's not just communications, she's tech today, helping out.
Yeah.
But here's our leadership team for the year. And this isn't possible without our strategic partners for 2025. Our platinum sponsor, Annie Mac Momentum Group, and our gold sponsor, Coast to Coast Closings, Gaffney Law, Cross Country Mortgage, Leader Bank, MLS PIN, Clark Hill Inspections, Bay Equity, Stratera Law, G-Bar, and our presenter today, Paul Romano out of Newton, Mass, with Skyeburst Wealth Management and Ameriprise Financial.
Greg, are you sharing a screen at all or no?
Yes. Am I? Is it not sharing?
We're not seeing the shared.
Okay, so stand by one sec. Let's get that fixed for you. Go back here. Can you see my screen now?
Yes. Yes.
Okay, so let me go backwards. What you guys missed. Here's our leadership team. Here are our strategic partners we just ran through. And just want to give a quick reminder, save the date, June 11th. We've got our mid-year luncheon. That's going to be right in Newton, Mass. Seating is limited and member price is only $20. And that's going to be on June 11th, noon to 2 p.m. We've also got a Cape Cod cruise. That's going to be Tuesday. It's in Hyannis, Mass. Sorry for the resolution on this image in the PowerPoint. That's going to be from 4:30 to 5, and that's Thursday, June 24th. And then we've also ran.
It's June 26th.
26th, did it change
Yeah.
the date? Oh, okay, that did change. Thank you. On Thursday, July 17th, we've got the summer soiree, and that's going to be benefiting a fundraiser for the Realtor Relief Foundation. That is from 4:30 to 7:30. Great networking event at our past president from 2023, Nora Lynch. She's going to be hosting that. And then we've got an amazing boot camp. For those of you who have not ever attended the boot camp, I attended it for the first time last year. And this is something you don't want to miss, August 17th. And that is on a Thursday. There is a pre-game, so to speak, the evening before. We've got the registration open on that up in Portsmouth, New Hampshire. Anything you want to add on that? No. And
I can add just in terms of the boot camp.
yeah.
I can just add that we've been doing it now for several years, and it's a place where you get to network the night before. Locally, a lot of people will stay overnight in a hotel if it's not drivable for them. The next day, it's a packed full day of learning from each other. So instead of having outside presenters come, we have each other presenting to each other. So we have different topics. You get to choose which topic is more interesting to you that you want to learn about or you want to share about. And it covers the gamut from recruiting to listing to buyer side. all kinds of topics, social media, tech, and you're learning from the best of the best because, as you know, CRS designees are the top producers here. So it's a not to miss event.
Yeah, thank you, Marie. And I'll point out getting there the night before, we have a room block. It is limited. The room block does sell out, so I would register as soon as possible. I travel 3 hours to get there, so I will be there the night before for sure. It's not just a little drive in. Michelle, you're here. You're connected audio now. Do you want to take over?
No, you can continue on. I
Okay.
apologize. I was
Okay.
not able to get on Zoom. I'm sorry.
No problem. Tech gets us every once in a while, every one of us. So DC mid-year, there's going to be a meetup. If you do go to DC mid-year, we've got the meetup in our calendar. Monday, Meet the Masters on June 9th. We're going to be previewing upcoming course that we'll have in July, actually. That is going to be AI class held in Connecticut, in Norwich, Connecticut. The mid-year luncheon we just talked about, along with on the 26th, which is the coastal networking event. On the 17th, we talked about that. That's the soiree at Nora's house. Our Connecticut class is July 22nd. First AI class all day, 8 hours. You're going to be an expert on that. First class for New England. The 13th networking event, which is the pre-boot camp, like we said, and then the 14th is the boot camp itself. 16th, did we have a class scheduled for Maine? Which one was it?
I'm not sure what it is. They were still deciding, but we'll be getting details shortly.
We'll get the date set and information will follow. CRS week, September 16th, and then we'll have the luncheon and installation event in Connecticut. And then right now, let's just get right to today's topic and our speaker, Paul Romano. Paul is with Skyeburst Wealth Management and a financial advisor for over 20 years, providing financial advice. And I'm just going to turn it right over to you, Paul. And I'm going to stop sharing my screen and give it to you. How's that sound?
Sounds great. Now I can only hope that I can share the screen. Let's see. Oops. As soon as you let me.
Yep. Let me just stop for 1 second. Here we go.
All right.
Paul, it's all yours.
All right. Let's see. Well, thank you very much, Michelle, Greg, Marie. All the presidents are here today, so that's great. Probably other presidents as well. One thing, sometimes I get a little too excited, so if I speak too fast, slow me down. I'm calling this a financial conversation because Greg gave me probably 2 or 3 subjects that I could probably hold a half-day seminar, webinar on each of them. So hopefully I do it justice and whet your appetites. At the end, I will provide my contact information. I'm one of these people, like many of the folks here. I'm an educator. I like to share different things. I like to answer questions. So if we don't get to them today, feel free to just reach out to me. Happy to answer those. Here's the first thing. Let's see. Okay, great. So today's agenda, we're going to touch on retirement plans, what different features and options are available to you. Greg said, as people begin to age gracefully, Paul, they should know about Roth conversion IRAs. You can do these also well before you get later in life. And then Marie and I had a conversation a while ago, and Greg, just to do a quick market update, I will say I'm very excited to be presenting today. I'm sure everybody woke up and China and the US had a conversation. The stock market is dancing right now, so it doesn't mean it'll stay that way, but tariffs have been on everybody's mind, and at least today, they're on everybody's mind for a positive reason, not a negative reason. So without further if Greg and a few of us were talking before we started today. What a lead in, Greg and Courtney and others. I said, the most important part, if I leave you with only one thought today that I would like you to retain, if you're not doing this, I call it pay yourself first. So everyone that's working, doesn't matter if you're 22, 32, 42, 52, 62, you should have, just like you have a business plan, you should have a financial plan, but as importantly, a budget that puts money aside for your future self. It could be even your current self, because one of the things, you have a lot of clients. How do they buy a house? They accumulate money. So again, making it a priority. This particular graph here is just indicating, starting early, use the power of compounding as your friend. Second one is, separating short-term goals should be handled differently than long-term goals, and they should be invested differently. I always sit there. If you were buying a home within the next 2 years, you should be in the saving bucket, and you should be investing with safe investment tools, because you don't want to try to buy a house and need a $250,000 payment and have experienced what happened in March and April, and you're down 10, 15% in your portfolio potentially, and now you don't have enough for down payment. So we work very carefully and consciously with our clients to make sure they have money positioned correctly. And then on the investing side, again, accumulating, putting money aside for whatever it is important for you, be college, retirement, maybe buying a vacation home. This is probably too small, and I apologize, so I'll talk to it. So there's many different ways to save money. So you can put money into an IRA or a Roth as an individual. If you have a business or you want to put more money, there's things like a Simple IRA, a SEP IRA, an individual 401k, or sometimes referred to as a solo 401k. If you have a firm that wants to have a 401k, you can set up a 401k. Simple and SEPs are really, really easy to set up. And the beauty is there's really no expenses to set up either of those. There are some expenses with 401ks because you have to report them to the IRS. And Simple IRAs, if you have a small firm and you want to have some employee retention, you can set it up where you have, if the employee makes a contribution, you could match it up to 3%. So that often is an incentive to try to retain someone, or to even potentially plant the seeds for why someone would save into a retirement plan. One of the things that I speak with all my clients is try to grab that free money. So a Simple IRA is an example of free money. If you're providing one of your team members a 3% match, that's free money. I would say you make 100% on your money there. The other thought processes, each of these, you could invest in anything. Some people maybe are very, very conservative. You could put it in a CD. Don't recommend that if you have a 5 or 10 year time frame, because you're losing out on having your money grow and appreciate, but you can do that. You can put all your money in the S&P 500, or you can have a diversified portfolio. So someone like myself, or any of you, if you have financial advisors, can guide you through that process. But the more important thing is to save. One of the other things we encourage every year, if you're doing better, just bump up your savings by 1%, because if you do that, you don't feel it, one, because it's pre-tax dollars. Most of the case, you can put also some of this into a Roth IRA, but the beauty is just little pieces accumulate into a very large sum if you start out. So just keep that in mind. This is for later in life. I provided the retirement decisions timeline, kind of leading into the Roth conversion IRA conversation here. Typically, when I make it for simplistic, when you're 59 and a half and older, and if you retire or you need to take money out of it, you can take it out without paying a penalty. Right now, if you say you're 45 and you're going to take money out of your 401k and buy a home, you're going to pay federal, state, and a 10% penalty. So you want to be very mindful when you take money out of your retirement accounts. But once you get to 59 and a half, and depending what state you're in, you'll owe federal taxes and your state taxes. This year, unique circumstance, if you're between 60 and 63, there's a catch-up provision, and this applies also to Simple IRAs. And so if you want to know more about that, let me know. Then you have Social Security, and Social Security starts at 62, and you can take it anywhere between there and 70. If you take it before 67, presuming that's your full retirement age, you do pay a penalty or you get less money, and that's what you get for life other than the cost of living adjustments. And then the other reason why we're talking about Roth conversions, at age 73, the government has an IRS regulation that says you have to take money from your retirement accounts other than a Roth. So if you have 401k Roth or things like that, you do not have to take it. But if it's a pre-tax, you do have to take it. And often you don't have control at that point. So the purpose of speaking about Roth conversions is if you pay now to move your money over to a Roth, you're reducing how much you have to take out for required minimum distribution. So like we refer to this as controlled results. So the more you control, the more it plays to your favor. One of the other things we spend a lot of time with our clients is the tax control triangle. Diversification is very important with not only investments, but also where you put the investments. So if you put all your money in the right-hand quadrant here, it's all pre-tax dollars, it's growing. And I always alert my clients, if you had $1 million in this bucket, it's really not $1 million when you go to take it out because you're going to owe federal taxes and potentially state taxes. Money in the top quadrant here, this is what I call the jackpot. One of my favorites is you put money in after tax, you put it into a Roth. If you have children, you want to put them, save money into college, you put it into a 529, and any money that comes out of that comes out tax-free. So down in the bottom quadrant, that's where your required minimum distributions are. In the upper quadrant, there are no required minimum distributions. So it's a great opportunity to save money. And it's also a great tool if you want to leave an inheritance, because again, nobody pays taxes in the top quadrant. So but that's Roth IRAs. 529s, a whole nother conversation. Have a lot of new features in a 529. And then to your left here is where you might have a stock. You can see here, money market, high yield savings account. Money comes in after tax. It grows ideally. Please, I'll just give a little plug here. If you have money sitting at a big bank, not making money, feel free to reach out to me. You should be in a high yield savings. You should be making 3.6 or more, 3.5. You can make more in CDs and things like that. So don't let money just sitting around, because one of the things that I would like to see everybody always do is having your money grow within the time frame you're looking and the risk tolerance you're comfortable with. So what's a Roth conversion? So you're taking money from that bottom quadrant and you're going to move it up to the top quadrant. But here are a couple of key important things. You don't do that without paying taxes. So back to the previous, if you have money in the bottom quadrant, so usually the goal is, say you want to take $10,000 from the 401k, simple, SEP, or whatever, and you want to move it to a Roth, you pay your taxes today, and ideally you pay it out of pocket taxes so you get the full $10,000 into your Roth. Once it's into your Roth, you no longer have to worry about or be concerned about required minimum distributions. When's a great time to do a Roth conversion? Interesting enough, the last 4 or 6 weeks where it's a great time because investments were down, you can move more money over and then get the growth happen in the Roth. So it's a tactical type thing. It's not meant for everybody, but it does pay large dividends later in life. And this is how you actually massage this. And I just put this on here. So say if you're one of my clients, and we'll just make it you're single. So if you wanted to stay, say you made up to, say you were making $75,000. So you're in the 22% tax bracket. We would have you try to, if you want to do a Roth conversion, get up to the 103 and convert that much money so you still stayed in that tax bracket. And so basically, I look at it a roof. If you haven't used all your money up to the roof and you want to do a Roth conversion, you would convert that. That's we spend a lot of time. I don't want to call it tax planning because financial advisors are not allowed to use the term tax planning, but we'll provide tax guidance, so to speak. We typically work with a CPA or tax accountant in this case because it's a little finessing needs to go on there, but it's a lot of fun to help a client to do a Roth conversion. And you can see different little things here. There is one subtlety too, and we make this recommendation. There's a 5-year rule in our Roth IRA. So if you're sitting there today and say, I don't have a Roth IRA, and you qualify in some size, shape, or form, open a Roth IRA, put $100 in it, starts the clock. So say you're at 55 and you want to have your money when you get to take it out at 60, put some money in a Roth IRA today and start funding it or doing your Roth conversions. So that's probably the one subtlety in a Roth IRA that's not well publicized and sometimes catches people. And then there's other ways to do Roth conversions. You may have heard someone do. You see the term on the bottom here, backdoor Roth IRA. That's not that's another subtle way. So Roths, like I say, are one of my favorite tools with clients, friends, family. Just money in a Roth is never pay tax again. So that's the brilliance of a Roth IRA. So I'm switching over to the stock market update. And I have no idea what time. I wasn't tracking my time here, so I think I'm on track. So, so I thought I'd give you a quick little stock market update today. The Fed has 2 mandates to have inflation between 2 and 3% and unemployment around 4%. So one of the things that you probably heard if you're following the headline news, the Fed is getting some pressure from the administration to reduce the Fed rate. But the Fed is looking at please let us do our business. We're having a hard time keeping inflation below 3. And right now unemployment's still at 4. So that's why they did nothing in the most recent meeting. And there's all sorts of speculation if they're going to do something at future meetings. At some point they will. Probably the big risk here is, and you probably heard consumer confidence, which obviously impacts real estate and things like that. So if the employment or corporations begin to slow down, that's when the Fed will move the Fed rate down to try to make money more attractive, so business will invest. How do we get here with some of the concerns in the stock market? Unprecedented situation here back in 2018. The Trump administration had I'll call it a face-off. That's my term, since hockey season still for some folks, is that they went after China and wanted to implement some tariffs. This time, totally unprecedented. We went after all 100, not all 170, but mainly all the trading partners we have. And that created a lot of concern, uncertainty. The stock market does its best work when it's clear what's going on. So it's predictable, it's consistent, and things like that. So over the last, I'll say 2 months, there's been, not clear where the tariff situation is going to lead. And if you say, why is the stock market up? I'll call it round numbers. I don't know exactly what it is up right now, but I think it was up 3% for the Dow, the S&P, and NASDAQ. It's because all of a sudden they're going, wait, we may have a clear path to what tariffs are going to look like going further. I say, you can see here, the dynamics going on right now. A lot of headline news. I will say that people always say this is an unprecedented situation. I was joking with one of my clients earlier today. I may have joked around with some of the folks before we got on a call. Every situation's unprecedented until you realize that's exactly what happened. So 9/11 was unprecedented. The stock market crash of 2008-9 was unprecedented. COVID was unprecedented. So when you hear the term unprecedented, it may be, but doesn't mean we haven't had a similar type circumstances. And so you basically have to, be patient and work through these things. Back to what I talked about, how you position your money with a time frame is really important, because you do see these type things happen every 2 to 5 years, and we have a dip, and then the stock market goes up. So, and this is a good illustration of what goes on every year. You sit there and go, what is all this black and red? Black is good in this case on the above line, because that means we had appreciation. The ones below where you see a lot of the red, typically every year, there is a point when the stock market goes down 3, 5, 10%. So last year we had pretty much what I call a clear sailing type year. It was sunny most days. The wind was calm. But we did have two in situations where the stock market went down 5 or 6%, but no one was really paying attention because it was a good year and we didn't have a lot of headline news. This year, stock market, you can see the S&P 500 and NASDAQ went down 19%. That's a pretty large drop, but believe it or not, we're almost back to par. We're not necessarily back, but the Dow is close to break even right now, and the S&P 500 and NASDAQ are, we'll call it between 3 and 5% down. So when people are saying, oh my God, I can't look at my 401k, can't look at my retirement, if you're diversified this year, it has not been nearly as bad as the headline news. So just again, probably the thing that we always share with our clients, stay focused on your goals. Don't get focused on what's going on for headline news. Again, a relatively small chart here, but one of the things that I wanted to point out here, most people are not familiar with, you always hear the S&P 500 is the best investment. Diversification sometimes is the best investment. I would say you may not talk at a cocktail party about how your investments are doing, but you'll reach your goals. You can see here over the last 3 years, I'm pointing out it's not highlighted here, but the MSCI, that's international. And international and the S&P 500 are nearly the same returns over 3 years. I would bet that even people in my profession would get that answer wrong because everyone thinks the S&P 500 is always the one where to put your money. So being diversified, I know one of the things that I look at each day, actually, I'm sure you do as well. You go, where are interest rates going? And I always look and say, what's the 2 and 10-year treasury bonds doing? Because those tend to indicate where the mortgage rates are going. People who say the Fed's going to change the Fed rate. That didn't happen last time. I think most people realized when we had the Fed rate cut last, you say, oh, the interest rates are going to go down. They actually went up because the 2 and 10-year treasury is a reflection often of where inflation is going. So one of the things the United States, and this is not a political statement, but one of the challenges we have in the United States, we have a large deficit now. It has to be funded. So you have to make the treasuries interesting and attractive to the rest of the world. So sometimes you may need to keep the interest rate higher, which is going to put pressure on mortgage rates. Sorry to share that fact, but we hope that the U.S. the Treasury bonds go down a little bit, which will then help mortgages and make it more attractive to buyers and things like that. So just this is probably my most simplistic side, but when you think of smart investing, keep your emotions in check, stay focused on your goals, know your risk tolerance. Take the long-term view if you're talking about retirement money and things like that. Embrace diversification and asset allocation. You put all your eggs in one basket. Sometimes it can be very painful. That's very specific with stocks. Often someone will get married to a stock, and sometimes they run great, sometimes they don't. And then one of the things that we do for our clients is we rebalance regularly. So. And this is what we do as financial advisors, a little plug for what I do, but we have financial advice. We build financial plans. They're all personalized to what your goals are. We have regular meetings and then access anytime. And trust me, I often refer to myself, and I'm sure as realtors, you do the same thing. You feel like you're a counselor, things like that, a psychologist, because a lot of things, money is emotional. Buying a house is really emotional and things like that. So, that's when we shine, right? Because you don't shrink. You have to go out and approach your clients and keep them confident that they're doing the right thing. I know Marie and I know each other best of everybody here. I mean, Marie does a great job of hand-holding folks that get nervous when you're putting a bid in. There's a bidding war. I say it's a business transaction. You have to take the emotions out, understand what you can afford, what you want to afford, why you're trying to buy that house, that location, and sometimes you don't get it, so you need to go just bounce on to the next one. So. Just to give you a sense, it's just not me at Skyeburst Wealth Management. There are 14 financial advisors. I'll say we're all equally talented. We all follow the same process. We work. I'm a financial advisor, as everybody else is here. Our clients' best interest is what drives us, and it makes my life. I always say my sleep quotient is easy when I follow providing the best advice for my clients. If you have any questions, that is my contact. Please take full advantage of it. If you say that was interesting, boy, you went too fast, I would like to know more information. Happy to set up a free telephone call, free consultation, just to give you a little guidance, because I'm here to make you more confident in what you're trying to do as individuals and teams and things like that. And that is my presentation. If there's any questions, I don't know how they're going to come. I see there's maybe a chat or something like that. Happy to answer any questions from, I'll say, the council or anybody in the field right now.
Well, I shared in chat Paul's little presentation here, and I encourage members to, reach out to Paul, have a consultation. Paul, my question for you, and then I'll open it up to everybody else on the call today. From a standpoint of an RRC member, working with you, is it something that you do through Zoom, or if they're in one of the 6 New England states, do they just call you and schedule?
Yeah, you can reach out to me. So in our changed world since COVID, used to be I'd drive to someone, even in Vermont, I'd work, I'd drive to Vermont. Some of my clients, especially prospects, I'll say, the first time they want to meet me, they go, who are you? What are you? I'd like to see your office, whatever it is. Happy to do that. If you're comfortable with we do all our meetings through Microsoft Teams for compliance reasons. We'll set up a compliance. I'm licensed in all the states in New England and many other states. So happy to engage in a conversation. If you ever wanted to hire me or anything like that, happy, and it would be my pleasure. So.
And then extending that thought, from a standpoint of the business model, are you performance, how do they compensate you?
Great question. So we do charge for our financial plans, because that's a level commitment on both sides. And it's relatively, I think it's affordable. I'll give you a range. It's between usually $5,000 and $1,000, depending if you're single, married, and what level of comprehensiveness you're looking for, maybe some of the challenges. And then we do charge for the investments fees. Typically it's 1% or less, depending on what you're having us manage. I always share that we do not charge for if you happen to have a 401k or something outside. Well, that's part of the financial plan because we want it to be aligned with your risk tolerance. We also provide things like money markets and CDs. There's no expense. I don't get compensated for that. Again, back to where I started earlier. I want to have your money growing. So I don't want it sitting at a big bank making nothing. I want to make sure that your money is growing so you can achieve your goals or go on vacation, whatever you, I would sit there. If you have $100,000 making 4%, you have $4,000 to go on vacation or do something with your kids or maybe pay for camp or I know you don't pay for camp at $4,000, but it's a start, but it's a down payment on a camp or something like that, or maybe the hockey season, so on and so forth.
And
So
I'll chime in here just to I want everyone to know that I am Paul's client. And we've been working together for a long time, Paul. I don't know how long it's been, but probably about 10 years or so. And I really feel like he's always looking out for my best interest. He has had me invest money. We did a federal thing one time. I don't remember, Paul, but I mean, he's always
series I bond. Yeah.
Series I bond, and he had me do some other things, the whole convert to Roth. I mean, so he's always looking out for me because I'm too busy selling real estate. I don't have the time to look at that stuff. He's the expert. I rely on him. And that's what I love is I have someone who is my go-to. And that's the reason I recommended him as a strategic partner here for RRC. So I'm just letting you know, I would totally recommend him to any of you if you don't have an advisor at this point. So.
yeah, and Paul, one other point you made, you normally work in conjunction with a client's CPA. What if an agent's just starting out? What if the agent, is doing their own taxes because their tax situation is relatively simple? Is there a minimum asset threshold that they would need before they started working with you?
No, one of the things that we, again, we're trying to work with all our clients. We said, starting early, things like that. So sometimes taxes aren't as significant. So it's really just getting started and getting the good fundamentals in place, pay yourself first and things like that. In those cases, if you're just starting out, and depending if you're doing a family, it's potentially you need insurance and different things like that because maybe you're starting out with a bare cover, so to speak. So we'll go and we cover the whole gamut and have that conversation and work with the client. I always joke around. All my clients are the CEOs. Some don't want to be the CEOs, by the way, of their own financial life. They just assume I be the CEO, but I always go, I'm the CFO. I'm going to make recommendations. I'm going to educate, guide you, work with you, and be there whenever you need me or be there so you actually achieve these goals.
And I actually referred several clients to Paul after they were young, first-time home buyers after they bought their house. I said, you need to start to think about the future. They had young kids. And I asked the same question of Paul, is there a minimum threshold? He's like, no. And it's funny because now here 10 years later, he's still working with them and they've come back to me and say, Paul's been great helping us get, off and running. So I don't think there should be a minimum threshold to refer to Paul if you have a client who you think needs some help and doesn't want to do it themselves, to refer them to Paul as well.
Well,
I'm an analogy type guy. It would be the equivalent of someone asking you, do you do people with starter homes? You go, oh, no, I don't do that. I need everyone with $1 million home. No, you start with a starter home because 5 years from now, they're going to bump up to the next home and potentially the next. Another area that I help. So if you ever have a situation, some people struggle to figure out where their down payment's going to come from. It's a great opportunity when you're working at a biotech or technology company and they have stocks, be it RSU, stock options and things like that, working with them to plan and to have a plan to how to diversify and make sure they have that down payment. It's been fun with a couple of my clients recently where that's how they ended up buying their home. Over time, we took money, diversified their stock portfolios that they were getting from their company and put that money aside for down payments. So if you have anyone that works at a large company that has those type things and go, I don't know how to get to the down payment, or they're scared about or concerned about they're going to get crushed on taxes, those are great opportunities to help them, to help you to get to that down payment.
Well, to Marie's point, where she said the buyer with the young children, in one of your triangles, you had the 529 plan. And I'll say 1/3 of my 2 daughters' college education was paid for by the 529.
Absolutely.
So, great topic, Paul. We will see you at some of the networking events, I am sure.
Well, now that you showed me all the events local, I really don't have any choice or option. I have to show up at Newton's in my backyard. So in Portsmouth and different places like that, Sherburne. So they're local. So I look forward to seeing you. I've come to a couple of events. One thing I committed to Marie that she's going to drag me by my ear if I'm not coming. But I said I would come with
them. He came to a couple last year, but not enough. So hopefully he'll get to more of them this year.
Absolutely. Look forward to meeting more of you in person. And thank you for your time and the opportunity. It's been fun.
Thank you. Paul.
Well, thank you, everybody, and we'll see you next month. Bye-bye.
Bye.
Bye now.
Bye.
Bye.
There you go. All right. Whew.
I apologize.
Got through it. Courtney's
Thanks for-
comment.